back. Still tuned into the market. You've got the index staring at about 17,231, while names like Hindalco, HDFC Life, SBI and M&M are seeing pressure in trade. Adani Ports is up about 3%. HCL Tech as well as Bharti Airtel and Maruti Suzuki at about 79.04. But let's connect with the management of ICICI Lombard. Bhargav Dasgupta, MD and CEO of the company, now joining in to talk about their quarterly earnings, the outlook for the insurance sector, as well as demand trends. Thank you so much for taking time out. Let's begin with the numbers, because your Q4 profits were down nearly 4%, and that's been coupled with an increase in the combined ratio. Walk us through the quarter as well as the year gone by, and what have been some of the key highlights for the company?
So, this was for us a good quarter in terms of growth. If you see our first 9-month number, the growth was a bit muted. I'm not looking at a standalone of last year, because if you look at a standalone number for us last year, the growth for the industry, for a company, has been about 28%. But I'm looking at the number aggregating Bharti AXA book, because that's the way to look at it, right? Because this year number has a Bharti AXA business incorporated. So if you look at the company as a whole, and if I add ICICI Lombard number last year to it, we add the Bharti AXA number, our growth for the company for the year has been a shade lower than 5%. But if you look at just this quarter gone by, that growth number is significantly higher. And within that, if you look at the March numbers, it's much higher. And in fact, we've outgrown the market, even with the base of Bharti added to the base numbers. So in terms of growth, it has been a good quarter. In terms of combined, there are two or three factors. One, when you look at vis-a-vis our last year numbers, when you integrated the two companies, Bharti AXA's combined was always high. And we had said that it will take us a glide path of about a couple of years to bring it under control. So when you look at Bharti AXA's number, they were, before the merger announcement, they were around 120. So on an integrated basis, that would have been anywhere around 104. If you look at our number last quarter, which was with the Bharti AXA book added, that was 104. It's come down to 103. Now, coming to your profit, point, there are largely two reasons. One, we had the wave 3 COVID losses, which was roughly about 27 crores, for the quarter, and about 550 crores for the year. If you look at, apart from that, there was another reason. If you look at the accounting for insurance, the accounting for insurance policies is such that you have to take the entire cost of sourcing that business upfront, and you take the revenue, which is the earned premium, over the period of the policy. So for us, if it's a 12-month policy, largely, and you write a lot of business in the month of March, you take the full cost of that sourcing in the month of March, but the income, the top line, comes over the next 12 months.
Now, given that health has definitely been the focus, ICICI Lombard has also managed to outpace the industry average. Help us understand how trends are now shaping up, and what is it that the company is doing differently to stand out?
I think that's a great question. So if you see, we believe a long-term shift in the way health consumption behavior is going to change. And this is not just because of the pandemic and the digitization that we are seeing, but this has been a global trend for some time. We believe that health consumption will be very, very personal, very self-driven, and very digitized in the long term. Traditionally, health insurance in India has focused on just the hospitalization cost, right? So you get some severe illness, you need a hospitalization, insurance pays for it. But healthcare is beyond that. I mean, healthcare is about a continuum of care. Preventive, wellness, your fitness, hygiene, as also outpatient care, normal doctor visits, and hospitalization if you require. So that's the approach that we are taking. If you look at our approach on our I'll Take Care app, we are providing the entire continuum of care, including pure insurance policy for OPD, costs, as also the wellness, the preventive, the advisory, the fitness, and all of that we are talking about. So all of that is something that we are building. And the other thing that we've seen is that people are willing to consume health on a digital mode. So a lot of telehealth, a lot of video-based consulting, increasingly home-based care if the ailment is not very, very severe. So all of these are components that we are building. And over the last 2 years, we believe a lot of it has been built out, and we are now investing in terms of scaling up distribution. So if you see our this quarter growth, about 6 months back, we started hiring a lot of agency managers who come on board, hired their own agents, and the business is now scaling up.
Shifting focus, Mr. Dasgupta, to your crop insurance business as well, because that seems to have picked up over the last few years and seems to be contributing well to your business as well. Tell us a bit more about this space. How are you managing the risk? What is unique and how do you see it performing in the coming years?
So for us, till we did the integration with Bharti, we did not have any crop insurance business. We used to write crop earlier, but we went out of the business. With Bharti acquisition, we've inherited some of the crop business that they were writing. So when you see our numbers this year, that has the Bharti book that has come in. Now, if you see the crop insurance business, now most of the commitments are for a longer term period. So we will stay invested in that business for that period. In terms of what we are seeing for the Bharti book, it has been profitable even for us. In the integrated business for at least for the year gone by, we believe it will be profitable. We are watching the entire crop cutting experimentation before we take a final call on the profitability. We are holding reserves conservatively at this point in time. In terms of looking at the future, what is happening is that gradually the scheme seems to be changing a bit. Some states have gone away. Some states are going into a model which is not completely transferring of risk, but it's a range-bound model where if the loss ratio is below 80%, then the insurer will have to refund the premium. If it is more than 110, the state will step in and pay the claims. So it's a range-bound product that is kind of evolving. In a few states have opted for that. Few states have opted out of the insurance scheme. So there's a lot of change happening, and our sense is that there is a need for using data which is independent of human-driven crop cutting process to identify and pay claims. That will make it faster and more convenient for the farmers. Use satellite data, maybe build capability of drone-based imagery, etc. And that's something that we believe is needed to be built. And I think ideally there should be an institution which does this independent of the state and the insurance company, so that there's more credibility in terms of the actual losses that we pay for.
Sure, point taken. But talk to us about your other segments, the motor insurance, fire insurance segments. How are you seeing the demand momentum in these, and any specific sector which you are seeing is getting a lot of traction?
Look, for the year gone by, motor was very tepid. So if you see, one of the biggest shifts that has happened this year is because health has grown well, motor hasn't. In the overall basket of the segments, health has become number one for the general insurance industry. Traditionally, motor has been the biggest segment. So this year, for the first time, health constitutes about 33% of the market. Motor is roughly about 30-31% of the market. So this is, in a sense, quite a big shift for the industry. But this is, as I said, was largely driven by the fact that new vehicle sales were muted. For two-wheelers, we had 2 consecutive years of muted sales, largely driven by demand issues. On the private car side, in the beginning, we had some good growth driven by the base effect of the previous year. But if you see the last quarter, the growth has been very, very tepid, in fact, negative. Again, this time it's been driven by the supply side issues in terms of chip shortage, etc. So this has been the past. Commercial vehicle is beginning to pick up. But for the next year, we are a bit more optimistic about motor. We believe that given this base of underperformance for 2 years for two-wheelers and 1 year for private car, we should see some growth momentum come back. We are hopeful that the supply issue will also, the chip shortage issue will also get ironed out in the next 5 to 6 months, and rural demand will pick up for two-wheelers. So we are optimistic about the motor segment, looking ahead. Health has had a good run in terms of top line. With that base also, we believe health will continue to grow because it's a very underpenetrated sector. And there is a clear understanding of the need for adequate health insurance in the mind of the consumer because of what all of us have gone through for the last 2 years. So that's also a positive. I think the commercial lines, which is for the corporates, we are seeing a lot more investment in infrastructure, now. We are also seeing some amount of capacity addition that is happening across certain sectors, largely fueled by internal accruals, and maybe some international borrowings. But we are seeing some of that. So we see positive momentum even in the commercial lines. So we believe the industry should grow well next year, maybe in the mid-teens or low teens, on the back of maybe about an 11% growth that we've seen this year.
Finally, walk us through how pricing trends are shaping up, because I understand you expect that premiums will, continue to see growth in the current environment. Are you seeing higher risks especially in health and, cost of vehicles as well having gone up?
Yeah, so inflation has an impact for all of us, and you've rightly identified the aspects of inflation as it affects our industry. So, motor, we have taken some small price increase, largely driven by the fact that motor pricing was very, very aggressive because as an industry, for the last 2 years, people have just gone for market share, maybe hoping for some frequency drops in terms of claims. But that is behind us. We are seeing high, reasonably back to normal frequency in terms of claims, and we are seeing some amount of inflation. So we've taken some single-digit price increases in the motor OD own damage segment for the private car. On the TP side, the claim inflation that we see, and these are driven by court orders and wage inflation, that inflation has been a double-digit number for the industry for a long, long period of time. But for almost 3 years, we've not had a price increase. So we are hopeful because it's a regulated product, and in the last couple of years, we've not had a price increase. We are hopeful that this year we'll get to see the price increase. There is an exposure draft. It's a small increase of roughly about 3% on a portfolio basis. But so be it, even a small increase helps. On the health side, at least we are not thinking of a price increase for our retail customers, largely because in spite of the fact that as an industry, we paid 25,000 crores of claims on the COVID side. And, by the way, and I want to make this point to your viewers here, for the industry, the total profits is roughly about 4,000 to 5,000 crores. And industry's paid about 25,000 crores claims, and we've not gone out for seeking any support or help from anyone. We've kind of taken it in our stride. But in spite of that, we are not seeking that kind of a price increase. We as a company, we are not even planning an immediate price increase on the retail health portfolio because these are, we believe, one-off episodes. They will not sustain. What we do, however, worry about is the healthcare inflation. And there we believe there is need for more discipline in terms of pricing. And just because there is an affordability to pay because of insurance, healthcare providers should not inflate, the cost of healthcare. If that happens, then in future we may have to increase prices.
All right, we'll let you go on that note. Appreciate your time, Mr. Dasgupta. Thanks for joining in and walking us through the demand trends as well as your overall quarterly performance.